Shut up and sit down.
All right, everybody. Welcome back to Rebel Trading Group Podcast, episode 53. My name is Nathan Oliphant, and today's date is December 14th, 2018. It's a Friday, everybody. How are we? With me, don't forget him, as always, the gluten-free Jason Bessing.
The gluten-free Jason Bessing. What's going on? How you doing? Happy Friday.
Woo! We did it. We made it to another volatile week.
Another fucking volatile week, dude. I don't have... Oh, what's all this all about? Johnson & Johnson loses $39 billion in market value in one day.
Love it.
Wow. After report claims that it knew about asbestos in its baby powder.
Scary.
You heard it second here from CNBC to the Rebel Trading Group. To the Rebel Trading Group. This just in from Washington. Very volatile week. 700 point swings on the Dow. We closed today down 500 points, 496, call it 500. S&P down 50.5 points. NASDAQ down 160 points. Gold down $5. Still holding that 1242 strong. Oil 51.20, inched up from that 50 mark, but holding down, down 3% today. It's ugly out there.
It's nasty.
It is disgusting out there. I'm popping over to the Bitcoin. Another brutal session in the cryptocurrencies. Bitcoin at 3,148. I still believe in the blockchain, baby.
What a fucking year to be a trader.
Yeah, we were just talking about how shitty the year has been. It's brutal. I think it's a lot of people. I don't think it's just us. I mean, banks are reporting a lot of losses from the volatility.
Is this correct that the Dow Jones has almost lost 2,000 points?
Yeah. Did you see Apple and Google have given up gains for the year?
What a time to be alive, people.
Apple and Amazon.
Is it recession 2.0 time, or is it too early to call?
I don't think the economy. I think the market is just adjusting to the future of the economy, but I don't think the economy is in any sort of downswing.
Okay. Well, but there are slowdowns though.
Yeah, definitely. We've seen that, especially in the technology area.
Yeah, weren't you saying something like it doesn't really make sense because the earnings don't really reflect how the stock's performing?
Yes and no. At the end of the day, Nathan,
Yes.
A company stock price will reflect the cash flows, the revenue, the profits of the actual business. But the stock can react however the fuck it wants, regardless of the company. For example, I'm going to use one of my current positions as an example. You're not a huge fan, but I told you a little bit about Collector's Universe, CLCT. Nothing has changed with the company itself. With its profits, its earnings are actually slowly growing, but the stock is just getting pummeled. Why? Probably because it's a micro cap stock sitting at 100 million in market. It's a micro cap stock, so I feel like a lot of portfolio adjusting is just shedding off some of these things. It's still paying a dividend, which is under a 50% payout ratio. It's got some healthy numbers to it, but the stock is just getting obliterated.
Down 19% in a month.
So nothing's wrong with the company, but there's something wrong with the stock. And I think Warren Buffett has a quote along the lines of buy when companies are strong and stocks are broken. It was something like that. I'd have to find the exact quote, but...
Well, quote us here at RTG.
You heard it second, from the Buffett to the Rebel Trading Group.
All right, let's get into some news.
I
heard today, in recent news, China was going to ease trade tariffs on autos, so... I don't know how autos did today. I'm pretty sure the whole market took a shit. So whole
market took a shit. Ford is another one of my positions that hold and continue to want to accumulate on a stronger dippage.
Ford was up
But
today,
she's up, but she's holding strong at this 850 mark. Doesn't want to seem to go. Doesn't want to go.
General Motors basically was flat today. They had a pretty okay day. The whole market just kind of brought everything down. If you didn't hear before, there was that G20 summit, and there was kind of I guess a meeting or something was said that there wouldn't be any more increases to tariffs with China for a little bit.
Well, they called that 90-day truce. You think that's really? Yes. You think that's just?
I think it's a stepping stone.
A stepping stone to negotiate further.
Yeah, I think it's a perfect
postpone.
Yeah, that's what politics is, man. It's a waiting game at this point. I don't know. I feel like China's a big ally. I feel like if you're gonna, I don't know.
If some good deal does work out, what do you think it's going to do for the market? Do you think it's going to be the one factor that just pushes it forward? Do you think it's going to be that, or do you think that'll just be like it'll cause like a good rally? Like, you know what I'm saying? Like,
it'll be a trade agreement. It'll be something stupid.
Do you think it will? So what do you think? Negative effect, no effect, positive effect?
Positive effect.
And do you think that'll be like hugely? Do you think that'll be widely dramatic? Like talking 1,000 points on the S&P, 3,000 points on the Dow over a week? Do you think it's like those kind of numbers?
That would be insane.
Yeah, but do you think it's like something like that, or do you just think like, oh, the market popped up 400 points today?
I don't think the Dow Jones could ever pull 3,000 a week.
It has before, man.
You think you could do it now at this high?
I'm saying, but if that's the catalyst, could it do something like that? Or do you think that's overreacting? Short squeezing and...
Yeah. I think it's just too high like right now for it to like pull 3,000. It's going to get to the point where 3,000 is just a daily move. 3,000 up on the Dow.
Wow. Well, yeah, 300 points on the Dow in the 90s was just unheard of. Today, that's 1%. Yeah, okay, whatever.
Right.
Yeah. Oh, wake me up when it's 5 or more. What else has been going on? So we are all about taking on the banks and taking our own financial management into our own hands and profiting off of the buying and selling of large institutions, right? We're all about that and doing it for the little man, the working man. And Robinhood, I feel like this is just very newsworthy. Robinhood, the beautiful trading platform that most beginners are beginning to start out with and how most millennials are getting interested. It's how we have gotten into this game and come to be able to enter and love what we do. And they are now offering checkings and savings accounts that will both yield 3% interest. Now, as you discussed, let's put an asterisk on this. As you discussed with me, this is subject to the federal funds rate. But for the time being, rates are only going up, right? They're staying the same or going up. I don't think they're going to get lowered. So 3% could end up being 4%. And they're doing this to take on those big, greedy banks. They want people to move their money aggressively into Robinhood. And there's going to be no fees. 75,000 free ATMs. What? You can deposit your checks there. You can pay your bills from there. There's going to be debit cards. It's incredible what they're doing. And
what's great is that I know there's a lot of other banking services like that, but to be able to have the Robinhood user interface and flexibility of having your bank account and stocks and investments in one app.
Yeah, one umbrella.
Yeah, I want to be able to. I don't know. It comes to the point if I need some cash, let's just say something I don't know. I just made a big purchase and then I need some more cash. I could sell some stocks and then buy something.
Yeah, you can just move money easily in and out of your own accounts. I imagine that there's still the waiting times and everything because that's just SEC law and regulation. But Like I told you, if all my stuff was housed under one, do you know how cheap I would be knowing that, like, hey, every dollar you spend is another one that can just go next door. You know, you really want to buy that cheeseburger, you can put that $3 over here. Whatever you want to do. I feel like it's going to have a better impact. Plus, they're offering better yields. And there's no fees. There's no ATM fees. I want it all. No minimum account balance, and the debit card looks pretty too.
It's sleek.
It's very sleek. So I like the fact that it's going to be all under one umbrella, and I really congratulate them for what they're doing. And I think credit cards are going to be next. Mortgages and fucking auto loans. I wouldn't be surprised. Mm-hmm. So I think they're going to be a disruptor in the financial system. They already are. I feel like E-Trade and maybe Schwab and Fidelity, maybe not taking Robinhood too seriously quite yet. But I swear, I saw that one of my friends on Facebook who signed up for the checking service on Robinhood is 535,000 in line.
Wow.
500,000 people in 24 hours.
That's insane.
So,
dude, Robinhood crypto was up to like 3 million or something, like in a couple days.
Yeah, it's ridiculous. What they're doing is beautiful. How cool would it be if you could use your Bitcoin on your debit card? Or
that's what I'm saying. Like you could connect it or something like that.
Yeah, I was kind of hoping that crypto wallets would come out first. With Robinhood. That would be cool to be able to send. I wish I could make bets with you daily and just be like, I'm going to send Nathan $10. Nathan, it's a down day. Nope, I think it's going to be a green day. All right, I'll send you $10.
Binary options right there.
Yeah, but it'd be cool just to do it back and forth. I was hoping wallets would come out first, but I think this is exciting. I think it's newsworthy. I think it's something to watch. There's always rumors about Robinhood doing an IPO. And I would buy. Fuck it.
Oh, fuck yeah, dude.
I would hold it just cause of their mission, to be honest, just of who they are. I'll ride them to the fucking bottom of the ocean if I have to. If it just bankrupts, I'll just buy it because of their mission. That's funny. Speaking of IPOs, I have a little bit more market news. Let's keep this segment rolling. Did you see Uber and Lyft have filed for their IPO finally?
Oh no. Are you long or short Uber?
Rumors have it that they, on paper, do not make money.
I'm short Uber.
I mean, I have been a driver for Uber for about 3 years now. And I use them to make a little bit of extra money, and they help me get through fucking college. I swear to God, man, they saved my fucking ass. Sorry, language. Saved my fucking ass. And I mean, I made money. My driving experience is only nothing but pleasant. So the employees, I can tell you, are, not having any problems with the company. So I don't see where they're not making money. I can see that they're spending more on research and development than they're taking in. I can understand something like that. Like Netflix and Nvidia have free negative cash flow for fucking years. But look where they are. Negative free cash flow is a sign of spending and growth. It's a sign of value.
It's a sign of risk.
Yeah, that's on paper. That's what it is. But apparently, in this market, they expected to lose 9 cents, but they only lost 7 cents. So they're going to rally 6%. And we've seen it time after time after time on fucking Tesla and these semiconductor stocks. Like, it's absurd. It's absurd. But tracking back to it, I love the companies. I think this is going to be a Snapchat 2.0.
Oh, you think it's going to go up a bit and then drop?
And then just plummet when they find out what's already going on. Its heyday is already over, dude. Uber? Yeah, well, I mean, that rapid expansion that it had, that's over. If it was already a stock...
For sure, short Lyft.
I don't know. I heard the experience is better because it's often cheaper.
Who's calling?
It's funny. So like I said, I drive for Uber, and at my other job, every time a Lyft driver comes through, I say, "Hey, do you do you also drive for Uber? And they're like, no, yeah, I did Uber for a while, but Lyft pays better and it's actually busier in Jacksonville.
Lyft is?
Yeah, blows my mind. I've never called a Lyft in my life. I'm loyal to Uber. So I love the business. I love the company. I also love that they are,
Nice.
like Robinhood, disruptors in a shitty market, in a shitty industry.
We should short them.
Short them after like 4 months, yeah. After that run up and that exaggeration.
Everybody wants Uber.
Yeah. So I thought that was just interesting and market worthy.
Interesting.
So
You're better
something to
market
watch.
news with Jason.
Something to watch. Thanks for taking that one, bro. You want to hit us with a turbo? Since I stole your market news, I just knew a lot of shit that was going on.
Yeah. Tell me. Well, have we done this? Tell me if we've done this one before.
Okay.
Right? Do you know what a stop loss order is?
Ooh, I'm sure we have done it, and if we did, it was a while ago. So we can definitely do that. I know we've done trailing stop.
Okay.
Go for a stop loss order because I feel like that's a good one because I don't do them, so I don't talk about them. I'm a bad boy. You're asking me. All right. Okay.
You took my thunder. You
gotta put me on
reverse cast.
You gotta put me on blast. Okay.
No, this is reverse cast. Yeah.
Okay.
I'm taking over now.
Well, let's do this thing then. Okay. So stop loss order. So much like you buy a stock, you buy at 9. You say I'm going to get out at 9:15. Well, what if it goes the other way? You say I'm going to buy in at 9, but if it goes to 8:80, I want the fuck out. Well, you can put in what's called a stop loss order. And a stop loss order is an order that you place below the current market price. To use my example with the $9, you say I want to sell at 9:15, but I want to get out at 8:80, right? You put in that stop loss order. When the market hits 880, when a trade executes at 880, that will trigger your stop loss order to sell at the market, the current price at the market, sell your shares. It is a way to protect yourself from the downside. It's also something that, in my personal opinion, almost everyone should do. I don't do them. Because I sell covered calls, you can't put a stop loss against the covered call.
Stupid. So I don't do them. However, it's something I recommend, especially if you're trying to time. So you look at a chart and everything seems right. You've seen your double bottom. You've seen whatever MACD, triple indicator, TQQQ that you see. Whatever it is, you say, okay, I think this is the price to buy. Well, you should put in an exit strategy because you don't want to blow your whole account on that one trade. You don't want to do that. So if you put a stop loss, that will make sure that you get out. Now, one of the big fears is, well, what if I get out and then it goes back up? I guarantee you that's probably going to happen a few times. But what if it doesn't? What if it hits 880, you get out, and then it just plummets to 820? Did you really want to buy back in? And, oh, well, what if it didn't? Blah, 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 blah. Just because you get stopped out doesn't mean that you can't readjust the scenario and go right back in. You get stopped out at 880. Okay, well, what's the chart telling me now? Okay, well, the volume is up, and the price still continues to go down. My moving average is continuing to decline. Maybe I should wait a little bit. Maybe I was wrong on this. I'm going to save my money. I'm going to take my $880 that I just still have. I'm going to put it to work somewhere else. I'll try again elsewhere. And then you just position size and use your stop losses correctly. Yeah, boy.
Boom. How's that?
That's good. I like that.
That was a long one.
That's good.
There's a disadvantage to the stop loss.
It stays there.
What if you get gapped out?
Yeah.
So you buy your $9 stock, and you say, I want out at $8.80. Okay? You put that order in, Friday rolls around, the company releases earnings. All of a sudden, Monday morning, pre-market stock is at 714. Woo! It just got hammered, baby. $9 to $7.14 over a weekend because of a shitty earnings report. Well, your stop loss order at 880 is now way down because that stop loss order will trigger a market order. And maybe you don't want out at 714. Maybe you want to double down at 714. Yeah. So there is a disadvantage to the stop loss order because that's called a gap movement, when there's just rapid price movement from open to close or close to open. The gap down. Traded at 9 on Friday, opened at 7 on Monday.
Bunch of sellers.
And then you get wrecked.
Sellers.
And they say all gaps get filled. So I can continue to roll with this one.
That's what she said.
Giggity. I can continue to roll with this one though.
No, that's fine. There's a difference between, you're kind of like hitting it between a stop market and a stop limit, right?
Yeah, that was the next and last point I was going to make, is stop limit orders, which allow you to get out at a specific price. I want out at 880, no less.
Stock market's nice.
It is nice. And when I was learning the stock market and I found out things like this, it's what made me more interested about it. Because what really got me interested, other than dividends, was the fact that there were tools that you could put into place in order to mitigate your own personal losses, like stop loss orders, or, like I said, dividends. That was another good one. Like, your stock goes down, but you still made 3% in cash and dividend. Stuff like that. That's what made me interested. So, mitigating losses is definitely something that we all need to be weary of. Or you'll get burned. We've all done it. We've all got burned.
All right, let's go ahead and move into our topic. And that was stop loss orders, by the way.
Stop loss orders. The stop loss order. Use them.
Yeah.
Just because you get stopped out doesn't mean you can't come back in. Don't be a bitch.
All right, let's move on to our topic of the day. Jason, tell me, what is an IRA?
An IRA? You want to talk Roth IRA or just IRA?
Let's talk right now. We're going to go into retirement sort of.
It's a retirement episode. I'm about it.
Let's start off with, what is an IRA?
Okay. Well, do you want an IRA? Well, an IRA it stands for Individual Retirement Account. The most common, most popular, and probably 90% of you, if you're interested in an IRA, most of you are probably going to want to open a Roth IRA. A Roth IRA, well, I'm going to go into the two differences here. The Roth IRA is after-tax money. It's money that you got out of your own paycheck, went into your checking account, and you say, I'm going to put this money away for the future. So it's an individual retirement account with money that's gone through the income tax that you get to put into an account. It will grow and earn interest, dividends. It will appreciate, grow. You will continue to contribute to it 100% tax-free. When you go to pull that money out at 65, you have to be 65 when you pull the money out. When you go to pull that money out, it will have grown tax-free, and everything you withdraw will be tax-free.
So it's taxed on the way in.
It's because it's already been through the tax system, and it's a way for you to encourage you to grow your money. You say, well, if you save some money, we'll give it a tax advantage, and then it can grow. Oh, okay, yeah, that might be smart.
So here's the thing about the Roth IRA. There's always like caveats with anything finance. Well, you get like life insurance, but it's only term life insurance or something like that. But you get like really low premiums or something.
Yeah.
So with the Roth IRA, you can't. It's post-tax, right? You're taxed on the way in, or am I saying that right?
Yeah, it's already been taxed.
Yeah, you pay taxes on the way in, so it grows tax-free, and that's what's important about it. But the thing about like if you don't have a Roth IRA, you can if you do a normal IRA, you can deduct that contribution off your taxable income. But if you have a Roth, you can't deduct that off your taxable income.
Correct. So if you do a standard IRA, that's money that you have not paid tax on, and instead you're going to pay tax on the way out. And what's the logic behind that? It took me years to figure that out.
It's gonna okay. If you look at compounding interest, your money's gonna keep growing and growing and growing and growing. And then when you take that out, that money that you take out puts you in another tax bracket. So it's gonna get taxed.
Exactly.
It's like that back stack you're pulling out is gonna get taxed.
Yeah, when you go to withdraw it. So
here's the thing about the Roth, because when you contribute, it gets taxed at your current tax level, which is so much lower if you pull it out all at once. To be first off, and since it's growing, it's gonna get fucking huge.
Exactly. The logic is that you want to be retired. You don't want to work at the end of your career. Therefore, you don't want to pay the income tax, right?
Yeah.
So if you put it in the Roth, it's already been taxed when you were working, and maybe you were in the higher tax bracket. Maybe you made $75,000 a year and you're in a higher tax bracket. Well, when you only make when you're in that under $20,000 a year bracket, when you're retired, that money that you're pulling out of your retirement, you don't have to pay the taxes on it. So it will keep you in that lower tax bracket because you already paid it when you were younger, you were working and making more money. The opposite is with the standard IRA. Your plan is to be in that lower tax bracket later, pay the untaxed money, put it in there, and take it out at a lower tax rate when you retire.
Yeah, that's the idea.
So, most people want to open the Roth IRA. Now, what can you do with an IRA?
Well, I don't really know. I've never really opened up an IRA. I should, but I don't.
Well, Nathan, you can do just about anything you want to in an IRA. You can day trade if you meet the requirements. You cannot use margin, which means you cannot borrow money against your account to buy more stock. You cannot do that. You also cannot short sell stock. But for the most part, if you open an IRA at an E-Trade, TD, Scottrade, Robinhood doesn't have them yet.
That'd be cool.
But if you open one of those at a bigger broker, you can trade. You can trade options. You can do credit spreads. You can do calls. You can sell covered calls. You can do triple leveraged funds. You can buy inverse funds if you want to short the market. You can't short sell the old-fashioned way, but you can do ETFs. There's all kinds of things. You can put mutual funds. You can do all kinds of crazy things in there. A little bit less than your regular brokerage account, your regular taxable account, your trading margin account. A little less flexibility, but still a lot of flexibility. And that's one of the beauties about the IRA. And that's what makes it unique from the 401k, which we can get into later, or maybe a whole nother episode. But are you familiar with some of the disadvantages of the IRA? Why it may not be perfect for somebody.
Okay, so it really depends on, like, if you're making a fuck ton of money, you can only contribute so much.
You can only contribute $5,500 a year.
Yeah.
It's not much money. It's about $500 a month. What, like $480 a month or something like that. It's not a lot of money. It's a good amount. It's a good amount of money. $5,000 a year, you'll be set in 20 years, man. With the compounding of interest, that's besides the point. But
right, yeah.
There is the limits. That's one of the only disadvantages is the limits. Yeah. When you're 50 and a half, you can do a catch up and you can do $6,500 or $6,200 a year. And then it's maxed out. Everything after that is your normal, regular, taxable income.
Oh, that's one thing. You can't touch the money.
That's my second disadvantage. If not, yeah, that's probably the last one too. Second and last disadvantage of these things. You can't touch the money. Now, you can touch the principal. Giggity. You just can't touch the teacher. I'm just kidding.
That's the funniest thing I've ever heard.
You can touch the principal. You can pull that out. No tax penalty whatsoever. Why? Because it's already been taxed. Right?
Right.
You cannot touch the interest, the dividends, anything that's been accrued since then. So, let's say you do have, God forbid, a medical emergency.
Yeah, something happens.
You can sell into a cash position, and you can pull out $5,000 from your IRA at no penalty to you. The only downside to that is you're pulling money out that's supposed to be used for the future. That's supposed to be your nest egg when you're old and don't want to work anymore. That's supposed to be that money. But real life happens, right?
Yeah. Gonna happen. Life is gonna happen.
If you pull out all of your IRA, if for whatever reason you just need to clear it all out, you can do it. You can touch it, but it's going to be taxed at your current income tax. So let's say you've put in $10,000, Nathan, and it made $3,000. Congratulations on your 30% return in 2 years. We pull that all out. You need your $13,000 for whatever reason. That $13,000 will be added on to your annual salary. Let's say,
yeah,
you're going to pay a 20% tax penalty against all of those returns.
Yeah, get married or something that year.
So
it better be for good money.
So you got to make sure that that's money that you know you're not going to touch. You can't look at it as, well, I can use it in a case of emergency, and I can pull out the principal to buy a house. It's not what it's for. That is not what it is for. It is for a retirement vehicle. So be careful with it. And that's just about your only disadvantages to those types of accounts.
Right, you ready?
The depositing limits and the you ready for what?
For a left turn here.
Left turn, bring it.
Clickers on. Here we go. What about saving for retirement with a company and company contributions? Tell me about
you mean
that
through
one.
401ks?
Yeah.
Okay. So much like the IRA, to wrap that up, is the most flexible of the retirement accounts. The other primary type of account that exists in the United States of America is an employer-provided tax-deferred program. It's called the 401k or the 403b. Depends on if it's a private or a public company. It is a lot like an IRA in the fact that there is contribution limits, but I think it's much higher. You don't quote me on this because I don't deal with taxes. I'm not a tax guy. It's a little bit different than what we do. But I think it's like in the realm of $20,000 a year. You can put a fuckload of money into your 401k.
Yeah, that'd be nice.
And it is basically a retirement account that's applied through your employer. They take money out of your check, they manage it through a financial firm, and it's taken care of for you, out of sight, out of mind, set it and forget it investing. It's a good way to go. So it's much like the IRA in the fact that it has contribution limits, and it's also tax deferred though. It is everything you put into it.
Some companies have Roth options. Like the military TSP has Roth options.
Yeah, there are such things as Roth 401ks, but for the most part, you don't really need them, if I'm not mistaken.
I mean, I'm going to take Roth anytime you can get it.
Pay the taxes going in,
yeah,
and then have less money now. Less money now for more money later.
Yeah,
it's a good way to go.
It's not that much. I mean, you won't notice the tax anyways. I feel like, I don't know. I mean, you will, but
just pretend it's just another bill. It's just
Are
another
you honestly
bill.
calculating how much is coming out? Yeah, you can see your net or your what do you call it? Gross hours or gross pay before taxes.
Yeah, you can. Yeah, taxes, deductions. It would be displayed on your pay stub.
Yeah.
So the 401k or 403b, however you want to put it, has a lot of, I would say, a few more disadvantages than the IRA. Number one, and the absolute biggest factor, it is not as flexible.
Yeah.
The 401ks, 403bs are the plans and the mutual funds that you can choose from. There's probably anywhere between 6 to 12 different types of mutual funds that you can pick from.
Yes. An international fund, a mid-market fund, a large growth cap, growth plus, you'll see shit like that inside the fund name.
Bond fund, treasury fund. There's all kinds of things. But basically your money is locked into the plans that your employer chooses for you. And we don't like mutual funds here at the Rebel Trading Group. Why? There's something that we kind of fight against. You're paying an asshole to buy the S&P 500 every year and charge you 3% on your money.
Okay. That's fine.
Okay.
What if, now hear me out. Like, my company contributes. Like, there's some people who would do like 100. There's companies I've heard of doing 100% match, which is outrageous. But like, it's a thing. Like, that's free money that you're getting.
Correct. And I was gonna save that for the advantages part.
I'm sorry.
No, it's okay. You just jumped the gun. You're excited.
Really
You're excited. No, that is one of the advantages. Absolutely. You can not all, but most employers offer a additional contribution to your 401k plan. This is instead of having to pay for pensions or stuff like that for what they used to do. It used to be, hey, you just work for us for 20 years, we'll give you parts of the pension, and your money will go to the pension plan, and then we'll just pay you your dividend until the day you die. Well, that all went to shit because they all got over-levered and corrupt as fuck, and nobody trusts that system anymore. So now we have the 401k plan, which is now on the personal investor, each and every person. It's on them to choose how their retirement is going to be managed. But the employer will offer a little bit of cash, and I've seen on average up to about 10% cap. About 10% cap of what they'll put in. So, for example, you put in, let's say you put in $100 every 2 weeks. Well, your employer might match an additional $10 every time you put in. And
10%.
Yeah, that's 10%. And they might do that up to, 5% of your paycheck. If your paycheck is $1,000, you put in $50, they'll match that $5, however it works. There's usually a cap, but they will match up to a certain percentage, however much you put in. And that's one of the beauties about working for one of those big greedy corporations that I hate so fucking much. That's one of the beauties of it, is free money that goes into your retirement plan. The only thing is that the retirement plans are shitty because they're only in a few things. The S&P, International Fund, Dividend High Growth Plus Yield, 2020 maturity date, target date fund, and each one has analysts and fund managers that make millions a year off of you just putting money into their account, and they manage it for you. And all they're doing is buying maybe 30 stocks a year. That's it. Oh, we just track the Dow 30. The fuck? So that is the only, if in my eyes, the only huge advantage of why someone would really want to max out their 401k instead of an IRA is that employer contribution. You want to be able to max out all that free money. And in my eyes, once you max out whatever that contribution limit is, so they'll say, oh, we'll put in 10% up to $1,000 a paycheck. Okay, cool.
Stop contributing, yeah.
Yeah. Roll that extra money into the IRA.
That's what I do.
That's the best way to do it, in my eyes. take all the free money you can get. Once that's capped out, put it in the more flexible things that you can manage yourself. And you can still do set it and forget it. But even if you buy an ETF, you're going to save so much more money than these mutual funds charging you. If you just buy the Dow 30 it's like 0.25% a year. It's like nothing. It's like ridiculously low. You don't even notice it. But they take out these ones at the holidays. They'll just take a huge fucking chunk. 3%, boom. Where'd all my money go? Oh, Mr. Greenberg's got to drive his Ferrari to the Hamptons.
Yeah.
So that's my bit. That's my tidbit. Max out the 401k. Roll the rest into the flexible IRA. Because, remember, one last thing. You can't pull out from the 401k as easy as you can the IRA.
Can you... Okay, so what happens? Can you, like... I've heard of, like, rolling over. How do you, like, do that?
Okay, so say you decide to leave your current job, Nathan, and you said that you have a 401k. You say, fuck you, I'm gone. Well, you would want to open an IRA. Let's just say you choose E-Trade. You want some power. You choose E-Trade. Once you open that account and you no longer work for that employer, you cannot work for them anymore. That's the only time you can do a rollover. You can't do it while you work for them. You literally just call E-Trade. You give them your account information. They will pay any fees and anything to get your money under their umbrella. 9 times out of 10, most of those brokers will do that. And they take your entire 401k, sell it, buy the mutual fund price, whatever, put it into your account, and then from that point, you can buy, sell, trade. It doesn't count as a deposit. It counts as a rollover, so there's no tax consequences, nothing like that. It's really just changing it from your 401k, employer-driven 401k plan into your own personal IRA account. That's kind of cool.
It is cool.
It is cool. I like that the brokers offer that, too. It gives you that peace of mind when you're ready to quit. I don't need your fucking employee contribution. I got an E-Trade account I could be selling calls in. You're selling calls with the shit you... I love it. I love it! I love it!
Funny.
So,
right,
any more? Hit me with some more.
I think that's all I got, man.
Oh. So, real quick, let's wrap it up. Some advantages of the retirement accounts.
Are you quizzing me?
Yeah. Let's run it through real quick. We got the tax advantage. You've got it's pretty much the best one, right?
I'm sorry, what?
It's pretty much your best bet. That's why anyone would want to open their retirement plan. The best advantage is the tax advantage.
Tax advantage? I mean,
we don't get that.
Roth, I think there's a tax advantage, yeah.
Yeah, absolutely.
You gotta specify, man.
Yeah. Well, I'm just saying, like, advantages of just retirement plans in general. 401ks, 403bs.
Don't they have, like, different tax benefits, though?
Yeah, depending on which one you get. But it all has tax benefits in some way.
Yeah, okay. You either get the tax credit or you get the tax in.
Yeah, more money now, less later. Less money now, more later. And then some of the disadvantages is how much you can put in, or the flexibility of what's offered. That's not for what?
I mean, we have to think about the overall goal of the retirement plan is to save up.
Yeah, it's to save it up for years, decades, compounded, year over year. It's retirement money. It's not gambling money. It's not saving up to get a new car in 3 years. It's not buying a house money. It's not that either. It's not emergency fund money. It's retirement money. Now, to end on this is something you can definitely agree with. I do not have a retirement account primarily because I want the access to all my money at any given time for whatever reason, no questions asked. Because the money that we deposit, most traders deposit into their stock, margin, broker accounts, is already been taxed. So the principal going in is not taxed again. Only the gains are. So we put in $1,000 in Robinhood. We make $1,100 by the end of the year. We pull it out. We're only paying taxes on $100. That $100 gets added to your $50,000 salary. You paid $50,100. I don't think that for some people, owning a stock account or just a margin account, tax-wise, is nothing to worry about.
There's, you can, I don't know why people say this, but like, if you have losses on the year, you don't have to declare that.
No.
Like, you don't, I was like, obviously.
Yeah, you don't have to. You don't have to declare losses. I don't. Because because when you declare losses, you're trying to make it up for spending it somewhere else. And I didn't really, like, have things to get added to my tax bill, you know? In my current tax situation, and to be honest, maybe a lot of millennials, they don't really have to worry about the tax consequences of their trading. The only problem is if you think about it, when you're doing these 401k plans, you work for that company for 20 years. You're not talking having a $10,000 account. You're talking of having a $350,000 account. And the whole plan is to not get taxed right now on the gains on $350,000. That's not what you don't want to get taxed on that. That's what it is. So if you can continue to contribute to your stock margin broker account and you get up to the $500,000 by the time you're in your 60s, that's a little bit different story, because all your dividends, you make $50,000 in dividends on $1 million account by the time you retire, you're paying income tax on $50,000. That's when it's a problem. So if you're dealing with, to be honest, less than $250,000 in an account, you don't really quite need to worry about tax consequences. It's if you're putting it away for retirement, you do. Boom. Mic drop. I just dropped the mic.
Nice. That's a good podcast.
Good podcast. You want to wrap it up with something you're watching real quick?
Yeah. Yeah, actually, I do. I'm kind of looking for more income variety derivatives on options, and I like the Iron Condor right now. I'm looking for mild moving stocks. Like I'm probably trying to sell like less than a month, or try to sell less than a month Iron Condors. And I am looking at PFE. And it's kind of cool because it's towards the end of the year, and at the beginning of the year, the stock I was looking at was PFE, and now I'm looking at it again.
You did have that 50 call.
Yeah, it's not happening.
Well, I'm glad you didn't stick around with it. You made a good call on that.
I didn't pay a lot, so.
Yeah, you could have. As it started to tick up, you could have been drinking that Kool-Aid. Oh, here we go, I'm gonna hold it, and then time decay.
I don't think it would have gone up that much.
I think I have the right to use mine today.
Ready for it.
I'm watching the Ford Motor Company, baby.
Okay.
I haven't used her in a few months. I haven't even talked about like how that she's on a like blood curdling dip. But to be honest, like I'm so excited about it. She's sitting at 856. And I made a statement yesterday on the Stock Twits. If you can catch Ford at 850, you're getting a 7.05% dividend. That's not even including their special dividend. I think if you include the special dividend, it goes up to like 7.7 at 850. So I picked up a few at 850 yesterday. I'm trying to build up to 100. I'm trying to buy in increments. So put in $300 and bought 35 of them yesterday, and we're gonna see. We're gonna see where she goes. I continue to like her under 9, but I really like her under 850. So I'm hoping for more pain in that sector. Looking for it, baby.
Nice.
So, anything else you want to add?
I think that's it, man.
All right. Well, where can they at us?
You guys can find us on Facebook at Rebel Trading Group. All of our videos are recorded and archived on YouTube. Look us up, Rebel Trading Group. We still doing SoundCloud?
Yeah, a full archive is always on YouTube. But, hey, we are on Apple iTunes now, bitch.
Oh, yes!
Batch. batch. So find us. If you got the
Get it,
podcast
boy.
app, listening to this on an iPhone, boom, hit us on the podcasts. We're there. Our newest, maybe 2, 3, 4 episodes will always be on that feed. They're always going to be there, but like we said, that full archive is going to be on YouTube. You can go back and we have all 52 episodes prior to this on there. We have over 2 days of material. It's a beautiful thing. We're on iTunes, so that's the most convenient way that most of you will be able to listen. But we are also on Soundcloud if you're still about the Soundcloud. Just search for Rebel Trading Group, baby girl. Oh.
And without further ado, and a long time being, is it Monday yet?